To build anything that truly lasts, it takes time.
Let's also welcome Shivangi Sarda of Motilal Oswal joining us on the show right now. Hi Shivangi, good afternoon and good to speak with you. Firstly, help us with your take on the benchmark indices. Quite a range-bound trading session, but at least for the Nifty Bank, we can spot a decent recovery from the lows.
Absolutely. Very good afternoon, Shrishti. Thank you for having me. So you've seen that the indices have, taken a bit of a pause after the good rally of the last week that we've seen. But the good part is that we are holding at the support levels. And today, despite the negative opening, we've seen that there has been a roller coaster ride, much of a tug of war between the bulls and bears. But overshadowing were the bulls. So overall, we are recommending buy on decline to continue here for the index. Now, looking at the levels, 25,500 will be a major make or break zone over here, which will, decide the next leg of rally. But overall, there are good put writers making a base at the lower levels as well. So support-based buying will be intact for the next targets of around 25,850 marks and then positionally 26,000 levels. Now, rollover for the July series from the June one has been quite positive. Even seasonality wise, we've seen that July month has, recorded the highest on an average returns in the last 10 years. Over the last, 10 years, July has been one month which has always closed in green. So overall, we are expecting this positive momentum and the bulls party to continue. Now, support can be seen at 25,250 marks. Talking about Bank Nifty, of course, this index has been outperforming, especially the smaller banking names from the last three trading sessions. Overall, there has been some sort of consolidation and lackluster move from the heavyweights, but the entire pack is, kind of supporting and helping this entire index. It has surpassed its previous hurdle and trading in a new lifetime high territory zones as well. So we're looking at 58,000 as the next, step for Bank Nifty with a support of 57,000 zones with special focus on the smaller names.
Absolutely. Talking about July seasonality, Ashesha has been digging out the previous July month's data and she joins in with her analysis.
Well, yes, after a solid 3% uptick that we saw on the Nifty 50 level in the month of June, all eyes are on the month of July. But we were going through the data for the last 3 years and at the index level and for the broader markets indices, we have seen solid returns for the month of July over the last 3 years. First up, let's put the spotlight on Nifty. In 2024, it rose nearly 4%. We saw an uptick of nearly 3% in the year earlier and about 8.5% uptick in calendar year 2022 in the month of July. Shifting focus to the broader markets then, and the mid-cap index has also risen anywhere between 5 to 12 odd percent in the month of July over the last 3 years. So that's the kind of uptick that we've seen across indices, across broader markets in the month of July historically. Let's also talk about the small cap index. That one rose by about 4.5% in the month of July last year, an uptick of 8% in July 2023 and an uptick of about 8.5% in July 2022. So historically, when we look at the data for the month of July over the last 3 years, it has been a solid month, and after the solid uptick that we have seen in the month of June, looks like the momentum is likely to continue this month as well.
All right, thank you so much, Ashesha, for giving us all those details. So for the past 3 years, data do suggest that July month has turned out to be a good month for the bulls out there. Not just its Nifty as well as the small and the mid end of the market has done pretty well when it comes to the last 3 years data. But with this, let me also welcome Akshai Bhagwat on the show right now. Hi, Akshay. Good afternoon and good to be speaking with you. So Akshay, barring index, help us understand that for the month of July, which sectors do you believe can do well? Because For now, sort of a range bound trading session, at least for the day. But the banking index, select banking counters are doing well, select chemical counters are inching higher. Give us your sense that sectorally, how are you planning to place your bets?
Yeah, so sectorally, if you look at it's the bank index which is strong, but again in bank index you have to dissect the PSU banking space because if you were to look at the data points and the chart setups of the majority of the PSU space or the banks rather, they are in a very sweet spot and on the verge of breakout. So if you were to name a few stocks, State Bank has been trading in a range and is almost on the verge of the breakout of the 820, 825 range. I'm hopeful that this breakout will be seen in the month of July, and if it happens, then you should be seeing targets of 850 in the month of July. Also, Canara Bank has been on a rally in the prior month, and I believe the carry forward momentum should see this stock heading for its swing high of 120. Another stock is Bank of Baroda, also again from the PSU banking space, which I think is showing good signs of recovery in the last five sessions, and in all likelihood, this too should attempt a breakout above the levels of 260, and if it does, 275 should be in the making. So PSU space in the banking sector is one space I am betting on for the month of July.
Okay, that's the take coming in right now on some of those technical analysis and of course what's actually holding out from within the market segment. But Devin, just wanted to get your thoughts in on real estate as a space right now. My colleague just highlighted as to how it's been a muted listing for Raymond Realty. But how are you analyzing the realty pack right now? And would you say that, stick by with the premium players?
So I think within the category of low cost housing to the premium providers of the housing and the luxurious housing, our take would be that the companies which are into the luxurious housing, I think could possibly see a larger part of the growth in the business. Because on the same land parcel, when you, I think, fetch better realization and in turn make, I think, higher amount of ROE, ROC, I think you are likely to get relatively better valuation compared to, I think, the categories 2 and 3, that is the premium, and the lower end, that is low cost housing. So I think we would remain distinctly bullish about that prospect. And I think this is the journey which is likely to continue for around 8 to 10 years from now. We believe that I think even city like Mumbai alone, I think is having a potential to have at least 30,000 buildings going under redevelopment, and every redevelopment is basically being seen as a luxury part of the development in the city of Mumbai. So certainly, I think we are likely to see some of the players who are focusing on the luxury segment of the real estate getting little better attention in the market, and the appreciation also in the stock price would be slightly better compared to the other two.
That's the take coming in on the realty space. All right, Devin, so good having you on the show today. Thank you so much for taking the time out and speaking with us. But with this, viewers, time now once again to slip into a very short break in this edition of Closing Trade. But as we do that, hear out from our experts on Apollo Hospitals demerger plan, how it will benefit the shareholders and unlock the value. Let's hear out Tapan's Doshi take on this.
If you know this digital business, pharmacy business, retail pharmacy business was making losses, and that was actually bringing the profitability of Apollo Hospital overall down. Now, as it is going to get demerger, value unlocking will happen. If you see the current EBITDA of Apollo Hospital is around 14 to 16%, which may go to 20% post this demerger. Again, the valuation perspective, even if I see, I think it will go to above maybe 15-20% higher when the demerger normally happens. So Apollo Hospital is also doing very well. If you see their expansion plan is almost, you can say 7,000 to 8,000 crore of capex is there. 3,000-4,000 more beds they are going to bring. Even if you say average revenue per bed is increasing of almost 6 to 7%. So all this combined, I think this is better for the company, and both on the terms of ROCE or ROA or even margin point of view, I think it will benefit it. So one should hold on, and I think good times are ahead for Apollo, at least looking at that deal I can feel.